Today, I want to share with you guys on why I think Duolingo is the stock pick of the year. I think that this stock will double by 2026 or hopefully by the end of it, and why I think this stock is a great investment and why I think all the AI fears surrounding it is completely unfounded. Let's begin. So before I get into why I think Duolingo is a really good investment, I want to address why the stock went down in the first place. So earlier in this year, around May, it was trading at $450 per share. It went all the way down to $271, and now it is currently trading roughly around a price of $337. The reason for the massive drop in stock price after May was because of the statement made by the company saying that they were going to be an AI first company. Many of the people on social media interpreted that as basically the company laying off employees and just replacing everything with AI. So first of all, that is not true. And Duolingo is still hiring. They are still growing. It's just that they're going to try their best to incorporate AI into their app. Secondly, as with all social media backlash, they are all inherently temporary. So if we just look at their TikTok statistics here for Duolingo, you can see that they did in fact take a dip. They didn't really gain any new followers, but if you look at the monthly likes, they are trending back upwards again, and so too will the followers. For the most part, we can all agree that the backlash is kind of over. Duolingo is just doing their things again. They're uploading again. And like all social media backlash, they always do fade over time. You know, they're superficial. They don't really mean much for the long-term growth of the company. This was a lesson well learned for the company, but probably something like this will not happen again. So Duolingo will continue growing in their social media trend and following once more. A few months after that, we had Apple releasing their new AirPods Pro 3. Now, one of the features with the AirPods Pro 3 was that you are able to translate live when you have those AirPods in your ears. Now, this did cause a reaction in the stock price of Duolingo. People thought that this might take market share away from it, but I don't really think that's the case. And let me give you my reasons why. If people are putting in the effort to learn a language, putting in AirPods and then showing off your phone is not exactly the same. So it's not the same as not a substitute. People learn the language because they want to, or because they need to, or because they want to be immersed in the culture and be able to interact with the people there. You know, using your AirPods, using Google Translate, doing everything through a screen, it's not the same experience. Okay, Google Translate has always been around. The presence of Google Translate has not made it so that Duolingo was not able to flourish. The people who are going to use this feature or who's going to use Google Translate are probably not interested in learning the language in the first place. So, when learning a language versus using a translator app, these are two people with entirely separate goals. I do not believe that the release of the AirPods Pro 3 and its translating features, and that'll be true for all earphones in the future, right? They are not comparable. They are not competitors to each other. They are meant for a totally separate group of people. And then shortly after the AirPods Pro announcement, Google also made an announcement of their own, saying that they're also going to, through their Google Translate app, help people learn languages as well. Now, I don't know if you guys use any other language learning apps, but Duolingo is by far the most addicting. They got the formula down. It's what I have used and that has kept me on the longest. I have used several language learning apps as well, but nothing has kept me on longer than Duolingo. And the reason is really simple. Duolingo, it's highly engaging and they have the formula to make learning addicting, right? Think of it, think of the app that has the addictiveness of TikTok and then has the ability to help you learn. No other app has come close to the level of engagement and app design as Duolingo. Google Translate, they can try to compete, but I think they're a long ways off of competing with Duolingo. I want to go into the technicals on why I think Duolingo deserves to be at $450. If we look earlier in the year, a lot of people were willing to pay upwards of $500 for the stock. And then shortly after the most recent earnings in August, the stock price went all the way up to $469. Sorry, $468, it looks like. Uh, just in the past alone, and of course, and in February 20, in February as well, right? The stock price has reached upwards of $440. So there are three distinct instances in the year where people were willing to pay more money for this stock with worse financials. Okay, in these periods of time, the company was arguably should be valued less than it is now. The financials are better now than they were back then. So on the technicals, it does have the memory of it being able to go back to these levels. Now, looking at the fundamentals, we see that it has a 41% year-on-year revenue growth. This company is growing extremely fast. Look at the monthly active users, the daily active users, and the amount of people who have subscribed to their platform. The company, despite only being worth $15 billion, is already profitable, and they're generating huge amounts of free cash flow at the moment. They have virtually no debt, and they are taking control of their stock-based compensation, so they're not diluting the shareholders as much as they used to. And I just want to compare this to a company like Palantir. Now, Palantir is growing a little bit faster, but you can see that Palantir trades at a way more expensive valuation than Duolingo. The revenue is increasing at a very similar rate. Palantir has recently got their share dilution under control. And if we look at the metrics, the revenue growth, and we compare that to Duolingo, they are highly comparable, over 40% year-on-year revenue growth. The current PE ratio of Duolingo is currently sitting at 141, and the forward PE ratio is at 87. This is a 40% compression in the forward PE ratio over 1 year. And then in the year after that, it can go down to 60. And then the year after that, it could potentially reach the same PE ratio as Google. And this company is growing at 41%, while Google is growing at 13%. And just for example, there are concerns that revenue growth might slow down, but I don't think that is the case. I think revenue growth is going to keep on continuing going up. And one of the reason is because of Duolingo Chess. Chess is a huge market, and the learning market for chess has been, for the most part, remained the same. If you compare the learning flow for chess when playing Duolingo versus all the other resources you have, Duolingo is far more engaging. It is fun, it has a lot of good characters, a lot of personality. Meanwhile, if you were to study chess on your own, right, you'd just be reading a book. Nowadays, people do have much lower attention spans, and they are looking towards that quick release of dopamine. And while learning something, only Duolingo really offers that experience at the moment. All the other apps, all the other learning apps don't come close into the level of engagement and fun and brand recognition as Duolingo. When you think of language learning, you think of Duolingo. And I think as time goes on, more and more people are going to use Duolingo going forward. And if not for languages, they're going to use it for chess. And who knows what other products that they might make. So in terms of revenue growth, there is a very high chance that the revenue growth year on year can even exceed 50% or even 60%, right? There is no floor on how fast a company can grow. Sorry, there's no ceiling on how fast a company can grow. In addition, if we look at its profit margins, the net profit margins for the company is currently sitting at 17.7%. Duolingo is a software company. As the company grows and expands, this will increase to 30%. Yeah, absolutely. This will increase to 30%, and that's just going to help its forward PE compression even more. So as of right now, I think the company is extremely cheap with a current PE ratio of 141. It'll go to 87 next year. However, if you look at the monthly active users, the daily active users, the total bookings, like right now, like even after the social media backlash, the revenue only increased 41% year over year. think of it when it reverts back to normal, once everyone's over the social media backlash, once everybody is over all the fears regarding the superficial competition that people think that Duolingo has, this will increase. So in a PR marketing disaster, they were still able to grow their revenue year over year by 41%. I think come November 5th on the next earning calls, if they report good numbers, I think absolutely it will be over $400 per share. And I already see the trend going towards that. Most of the selling pressure has dissipated. For $400 per share by the end of this year, I think is extremely easy for this company. Now, I am taking a risk using stock options on this. So there is a chance that I could be wrong. Who knows? But I think this is a very high probability investment on my part and a high probability short-term trade. Of course, I don't ever recommend anyone doing trades in terms of investments. I think Duolingo right now is very, very good.